Breaking XRP news. Hey, what's going on, everybody? Welcome back to the channel. We have some amazing breaking news for you guys today in this video. So XRP currently sitting at 0.5% to the upside as we take a look here on the daily candle. So basically no movement to the upside or downside after the whole candle. We have 1 hour, 38 minutes left. As you can see right here, it came back up near that 1100 moving average again. And it is also getting right next to, let's close that out, go over here to our market cipher A indicator here. And it is getting very close again to that 21 exponential moving average, which we talked about a couple of days ago. Very likely that price comes down, test that zone right there. And again, I'm not a financial advisor. This is not financial advice. Do your own research. Do not buy or sell anything because we talk about it on the channel. But we're going to go into full detail today on the weekly, the daily, and the 4 hour. Today, we are going to be covering XRP in the charts. We are going to be covering Coin Center files lawsuit against U.S. Treasury over tornado cash sanctions. We've been covering that a lot recently. This is a big deal. Price analysis. We'll go ahead and show you the simple price analysis for XRP as well. Bitcoin price wobbles on US PPI as Bitcoin futures open interest hits peak. This is important for you to know the whole entire crypto market. So we're going to cover this right here. Share of Americans invest in cryptocurrency grows by 125% despite crypto winter. Thank you, crypto evangelists. You guys are doing a great job. Spread the word. We need to make sure everyone knows about crypto and how awesome it is because it's very, very important. And the biggest news of the day we're going to jump into: Ripple versus SEC case. XRP eyes monster rally as judge approves 2 firms to step in. And if you don't know what 2 firms those are, you will know today, but we've been covering this for days in a row now. Let's jump into it. Hey, by the way, if you're new here, my name is Ryan Huggins, and I'm a crypto and real estate investor here in Southern California. My job is to help be your crypto shortcut. So if you're like most people, you probably don't have the opportunity to spend hours a day looking at the charts, reading through articles, yada, yada, yada. But that is what I do. That's what we do here at this channel. We bring that information to you in a condensed manner. So if you're looking for a nice crypto shortcut, smash that subscribe button. So again, like we said here, on XRP, currently sitting at 48 cents, 48836 to be exact. And it is coming down. It has not retested our daily supply and demand zone that we've been looking at. That is also the exact level of our 21 exponential moving average right there at 0.47251. So very likely price does come down and tap that. And we're going to dive into the full charting of this at the end of this video, but I just wanted to show what we're looking at. That is based off of this candle. We're on the daily charts for XRP right now. That is based off of this candle right here. All right, so that's the supply and demand candle. Now we did actually go ahead, because this candle fully engulfs this candle, we just went ahead and moved that over and gives it a much larger base for us there. Now it's going to be quite an amazing hardcore fight if the bears want to win this, because they got to battle through all of this interference. So with this news that just came out, with the excitement, there's a lot of buzz going on about the market's potential turning around. The Fed might be flipping. They finally had a little crack in the armor, talking about that they do see that continuing to raise rates is starting to really hurt the world economy. Because you have to remember, as the different currencies crumble and as the US dollar continues to climb, remember, we have a lot of corporations that are also having 2nd, 3rd, 4th different locations in different countries, and they're losing profits because of the fact that the dollar is getting so strong that all the other currencies against it are falling. And so it's just hurting everything. So we may have a Fed pivot sooner than we like. So let's go over into the news and see what's going on. So the advocacy group called alleged that the OFAC exceeded their statutory authority in sanctioning Tornado Cash because the mixer was a privacy tool beyond the control of anyone. So if you're not familiar, there's a company called Tornado Cash. They used to be able to send your money into. They would spin it up and they would spit it out into a bunch of different wallets, basically anonymizing the money. If that's a word. I'm not even sure if that anonymizing, it just sounded cool and it worked. United States-based crypto policy advocacy group Coin Center has followed through with its intention to take the Treasury Department's Office of Foreign Asset Control, or OFAC, to court over sanctioning cryptocurrency mixer Tornado Cash. Lawyers for Coin Center, as well as crypto investor David Hoffman, an anonymous human rights advocate known only as John Doe, and software developer Patrick O'Sullivan, filed a complaint against the OFAC Treasury Secretary Janet Yellen and OFAC Director Andrea Gaki. The complaint alleged that the sanctioning of Tornado Cash was unprecedented and unlawful, in part due to privacy concerns over crypto transactions. And they stated here, if a user doesn't take proactive steps to protect his privacy, the ledger's transparency allows strangers to track his private associations and stalk his intimate relations. It invites publicization of and retaliation of his private contributions to unpopular causes, and it allows anyone to see whether he has lost a lot of assets, which could put a target on his back. As a result of the Biden administration's actions, Americans who use Tornado Cash to protect their privacy while using their own assets are criminals. Additionally, their receipt of any asset through Tornado Cash, even one from a stranger that they did not solicit, is a federal crime. And their use of Tornado Cash to protect their expressive activities is criminal as well. Now, what is also interesting is back in the day when this first broke, if you guys don't remember, there was a very high-level crypto person who started sending transactions from Tornado Cash money to all the high-level executives at big-time companies and also in Congress to basically counteract the ability of them to do this, because it would shut down all of those people's wallet addresses as well, because they had just received funds from Tornado Cash. Among Coin Center's reasons for the court to overrule the sanctions included donors wishing to keep their transactions private, claiming having Tornado Cash sanctions means that they are less likely to contribute. O'Sullivan and Hoffman, public figures in the Ethereum ecosystem, used the mixer as a means to protect himself and his family from the public tracking his funds, as well as to avoid potential civil and criminal liability from receiving unsolicited tokens, respectively. Doe, though living in the United States, has donated in crypto to pro-Ukraine causes amid the country's war with Russia. He claimed being cut off from a privacy tool would make it more likely for Russians' agents to learn about his pro-Ukrainian activities, potentially putting his livelihood at risk. Coin Center's legal team sought for the court to set aside Tornado Cash's designation as an OFAC specially designated national with a declaration that the criminalization of Tornado Cash is null, void, and with no force or effect. In addition, they requested compensation for attorney's fees and other costs related to the case, as well as any other relief that the court deems just and proper. Coin Center's lawsuit followed crypto investors backed by Coinbase suing the Treasury Department in September, claiming OFAC's sanctioning of Tornado Cash was not in accordance with law. Coinbase CEO Brian Armstrong argued that the Treasury actions exceeded its authority and would harm innocent people, remove privacy and security options for crypto users, and stifle innovation. BTC price wobbles on US PPI as Bitcoin futures open interest hits peak. So Bitcoin denominated futures open interest rate hits 660,000 BTC despite volatility remaining comparatively flat. Bitcoin saw flash volatility into the October 12th Wall Street Open as United States economic data began to move markets. And remember, this is what we've been talking about. Now, the Fed minutes came out today, and tomorrow the CPI data comes out. So all of this, very, very important. That's why we tell you to follow along. Make sure you subscribe so that we can keep up to date with all this information every single day. So BTC dipped abruptly below 19,000 as producer price index, PPI numbers, came in above expectations. A hint that inflation is not abating as quickly as the Federal Reserve might expect came with the PPI's release an hour before the market opened, which saw local lows of $18,967 for Bitcoin. The losses dissipated as quickly as they came, however, and at the time of writing, Bitcoin had already recovered to $19,000. A well-known crypto trader, Van de Pop, advised traders to stay away from leverage during the upcoming macro events, with CPI in particular tipped to provide some characteristic fakeouts both before and after the release. Bitcoin's trading range nonetheless remained narrow, and for some markets participants, there was no need to exploit the comparative small moves on the market. If you flip-flop randomly during the range while losing money unnecessarily, that means that you have no patience. Main scenario is exactly the same: 21K first, then the new lows of 14 to 16. So again, not financial advice, but that's what these traders out there think. We could have a nice push up to 21, followed by the final downside, creating the actual low of the market. A trip to those new macro lows would spell deep trouble for derivatives traders participating in the largest ever buildup of open interest in Bitcoin futures ever recorded. According to on-chain analytics resource Glassnode, the totally stood at 660,000 BTC. Bitcoin futures open interest at an all-time high and realized volatility near all-time lows. Quite the combo, William Clement, co-founder of digital asset research trading firm Reflexivity Research, commented. So as you can see here from the shot, we have the futures open interest all the way up here, significant, over 600,000, 660,000, they say. And then the price for Bitcoin and USD sitting right here below the $19,200. The US dollar index, the Dixie, which we talked about, continued its latest consolidation phase, lingering near the 113.30 after falling to clear the 113.50 on the day. Still more than a full point clear of the recent 20-year highs, Dixie provided new headwinds for risk assets. Dollar strength was nonetheless providing kindling for crisis elsewhere, however, as the Japanese yen returned to levels not seen since the 1990s. And despite the central bank's efforts to prop up the currency, USD JPY erased those gains through October, now facing new multi-decade records. Share of Americans invested in cryptocurrency grows by 125% despite crypto winter. So more and more people are joining the crypto degenerates. That's what's up. So the cryptocurrency market is in turmoil, with assets like Bitcoin registered significant lows in recent months, a factor that can presumably sway the investment trend among Americans. However, the number of investors opting to get involved in the sector is growing, despite the lingering uncertain future, as digital assets operate in an environment marred by a struggling economy and a threat of harsh regulations. And this is actually really great to see people getting excited about crypto, because now we're not at the peak highs. This is where more people should start to get excited and feel the excitement of what potential could be coming, because as people invest down here at the lows, they're going to be able to experience the potential of lifetime money in the highs. In particular, data acquired by Finbold indicates that as of the 2022 summer season, 18% of Americans have invested in different cryptocurrencies. The figure represents a growth of 125% to share of 8% of Americans who had stake in cryptocurrency during the summer of 2020. By the 2022 summer, 15% of Americans still had plans to invest in cryptocurrency, highlighting the belief in the sector despite the market downturn. The value represents a growth of about 36.36 from 11% of Americans who had expressed the intention to venture into cryptocurrencies during the summer of 2020. Investors are ignoring the crypto winter. Interestingly, Americans' growing interest in the crypto amid extended bear markets partly goes against historical trends, where a price drop has not attracted more people. At the same time, in recent months, the sector has been hit with the fraud incidents, with the infamous Terra Luna ecosystem crash taking center stage, with the collapse occurring when more investors turn to stablecoins to help alleviate the crypto volatility. So if you are not aware of what happened, when the market started to come down, people didn't want to sell out of crypto completely, right? So they sold their Bitcoin and they transferred it over to USDT, or in most cases, a lot of people saw this opportunity to gain extreme 20% on your money. So they transferred it over to UST, the Terra Luna stablecoin. And then, of course, that stablecoin crashed, bringing down all the rest of the markets as well. Notably, the growth indicates that investors in question can stomach the volatility. Such investors likely understood crypto is still an emerging asset class and technology whose impact on the general finance sector is yet to be fully known. In this line, some investors opt to ignore the short-term price volatility and focus on the potential future growth. The HODL gang, right? The HODL gang. 5 years from now, we're all going to be rich. That is the future. That is the dream. And again, not financial advice. All right, and before we jump in the charts, here it is, guys. Ripple versus SEC. XRP eyes monster rally as judge approves 2 firms to step in. Ripple Chief Executive Brad Garlinghouse has offered a clue on when the company's epic legal battle with the Securities and Exchange Commission will likely conclude. Optimistically speaking, he believes the lawsuit will be over in 3 or 4 months, though there's a possibility that it could be prolonged. XRP Securities lawsuit slated to end in 4 months. After 2 years of procedural victories and losses, the drawn-out lawsuit over whether XRP sales violated securities regulation could soon come to a close. Speaking to panelists at the DC FinTech Week conference on Tuesday, Ripple CEO Brad Garlinghouse said he expects the case between the SEC and his company, which began in 2020, to end by the first half of next year. However, he acknowledges it's difficult to predict correctly. Federal judges work at their own pace. Optimistically, we're talking about 3 to 4 months. Pessimistically, we could be talking longer than that. The SEC sued Ripple for allegedly selling XRP tokens via unregistered securities transactions. According to the securities watchdog, Ripple sold XRP to investors while making them believe that they would be getting a considerable return on the firm's profits. So what they say is that they were selling XRP to represent basically shares of profit from the company Ripple, but it was never that case. Garlinghouse noted that the lawsuit would be fully briefed before the judge by mid next month. He also reiterated that the case would not only decide the fate of the company, but shape the future of the entire crypto industry. The Ripple chief further mentioned that the landmark speech given in 2018 by former SEC Director William Hinman, in which he declared Ether was not a security, Garlinghouse pointed out that the judge had ordered the commission to turn over the documents 6 times. Late last month, Ripple scored another win as U.S. District Judge Annalisa Torres thwarted the SEC's efforts to shield the Hinman speech documents, a cornerstone of the company's legal strategy. Garlinghouse maintains Ripple is open to settlement with the SEC under one condition, that the regulator concedes XRP does not qualify as a security. And here is the big news that just came out in another related development. Judge Torres has assented iRemit and TapJet's request to file amicus briefs in support of Ripple and the legal tussle with the SEC. This is a big deal, and this just came out. The judge stated that the U.S.-based instant private jet charter platform TapJet and Philippines-headquartered cross-border payments company iRemit have until October 14th, 2022 to file their briefs. As Zcrypto reported previously, both firms have argued that SEC's drawn-out lawsuit against Ripple is a detriment to their business, as the XRP ledger, XRPL, and its XRP native cryptocurrency are essential utilities to them. All right, so let me know down in the comments, are you guys ready for XRP Army to win this lawsuit or what? Where do you think price is going? What's your estimate? Do you think $10? Do you think $20? Do you think $100? Do you think $1,000 per XRP token? Let me know down in the comments below. But while we wait, let's jump into the price as of today. So XRP, currently 49 cents, failure to clear the overhead hurdle at 56 cents on October 9th, may have attracted profit booking by some short-term traders. That pulled the price to the 20-day EMA of 47 cents on October 11th. So as we take a look here at the picture, it got very, very close. It didn't officially wick it, but it pulled it down enough to where hopefully the bulls did step in, and that was what we showed. And we will show you the live chart here in just a minute. Now, remember right here, the moving average, the 50 moving average is this red line. The EMA is the blue line here. That's the 20 EMA. We also have our RSI currently sitting at 57.29. As long as it doesn't drop below the 50, still staying bullish. And as long as we remain above the 20, we're still staying bullish. If it were to break here, then we may return to the 50 moving average, and that is also our breakout line of that 41 cents that we've been talking about. If this rebound fails of bumping off that 20 moving average and does not climb above 51 cents, it will suggest that the bulls are not viewing the dip as a buying opportunity, and that could increase the odds of a breakout below the 20-day EMA. If that happens, the selling could intensify in XRPUSD. They may drop to the break-even level of 41 cents. The bulls are likely to forcefully defend this level. Contrary to this assumption, if price turns up, rises above 51 cents, the bulls will again strive to drive the pair to 56 cents. And if they can pull it off, the pair could rally up to 66 cents. And as you can see right here, we're currently at the 20. Today's candlestick, as per this article, is green. It's pumping up. We're going to check the live charts now. All right, so here we are now on the daily charts for XRP. Yesterday, the blue candle will be down. Today's candle is white, as we talked about. It's up a tad, right? So 0.37. It did try to make its move to the upside, rejected off of our additional moving average we put in here. That's the 1100 moving average. Did not make the run above that today. So that new candle will be starting in 1 hour and 8 minutes. We'll see if we can make the run to the top side. And remember that number that they're talking about there, that 56 cents, that is based upon this candle here. That is our breakout candle. We now need to break above that one. It was previously this candle right here, that 41 cent level. It did make the break to the upside. All right, so we made the break there. We unfortunately rejected off the 56 cent level, 55,894, so 56 cents, right? We need to claim the 55 cents. And we've been talking about this. We claim 55 cents as a support. We can then climb our way up to the next level up here, 65 cents. As you saw in the article, they're saying 56 cents and 66 cents, 56 and 66. They're very, very close. Ours is 65,755. So essentially 66 cents as well, because that would mean that we reclaim that. So first we reclaim the 55, 56 cent level. Then we reclaim the next level up, which is the 66 cents. So what we need to do is see a continued move up, testing in here, getting up here, testing there, and then it can continue its rally. We are still above that 21 moving average, which is really, really good. So we've got that in our back pocket, still trying to move to the upside. If we were to break down below there, we then have our 50 exponential moving average, the red line, and our 50 simple moving average, the yellow line. So I personally use a couple of additional chartings, as you can see here. Also, in the RSI, it is currently sitting at that 55.92 level, 55.92. It is sloping down. It's in a bearish potential situation here as well. The background of the RSI versus the slow moving RSI is turned red, and we've also now broken to the bottom side of the market baseline. So we're gonna continue to watch. As you can see what happens when you break above the market baseline, which happened here. We had that nice start of the pump. Now we've broken to the downside, which as you can see last time we did that was about here, and we stayed that way. So when we have this big green background, we're looking up. When we start to get over in here, we're now 1 day into this black background, maybe 2 days, and it's looking a little bit more bleak. But we have a support level that has been kicking in right here that we're going to continue to watch. If we drop this down to a smaller time frame and we look at our 4-hour supply and demand zones, we're pretty much in the same area. So let's get rid of this box. We'll go ahead and box in this blue candle, and then we'll box in this blue candle. So this is where we're at right now. As you can see, we have this box right here that could be acting as a support, which it has already. And right now, the box that we just escaped out of, because this is moving, the blue candle is moving down, just broke outside to the downside of this right here, that 48 cent level, on its way down to a potential support line right here, 48.04. Right now, we're sitting at 48.732. So it's not even a full penny to the downside, but that is where we're at. We're also looking at our moving averages here on the 4-hour. The 21 exponential has sloped down hard. It also has changed its color to a bearish transition. We are now below the 50 exponential moving average and also the 50 simple moving average. The 21 exponential has crossed the 50. That is typically a bearish cross. Again, this is on the 4-hour. The other thing is we're also very, very close to the oversold territory. So I don't know, personally, if I'm looking at this, I'm like, you know, again, not financial advice. We're super close to the oversold territory. We could see a continued drop for a couple of little bit here before the real rally kicks in. So some people are taking profits, as you heard in the article, when you have this big pump. So let me show you, for example, what has happened. When we take a look at what's going on here, we look at price change from the bottom, like maybe you didn't get in here, like most people didn't catch this bottom. It came back, retested. A lot of people, professional traders, and we're talking about day traders here. We're not looking at the long-term bag holders that are looking 5 years down the road. For all of you guys, just keep dollar cost averaging. That's what I do. Remember, I have 2 bags. I have my buy and hold bag, and I also have my actual fun day trading bag, right? So as we continue to move, if we get from the bottom of this one up to here, you know, we're looking at percentage-wise, that was a 70% move. Most people that are trading day trading, that is a five times leverage. So that's a 350% gain, right? So if you put $1,000 in there, now it's worth 3,500 on that trade, you know, you might be taking that profit. That's what is potentially going on here. Also, when we take a look at our RSI on the daily, it got to the overbought territory, extremely overbought. Now it's coming down a little bit, totally understandable. So we'll continue to track this. Let's go look at Ethereum, see what's going on here. Ethereum had a nice move today to the upside, started making its way, and now it has, looks like it's hit off of a resistance level here. Let's take a look at our 4-hour candles. Actually, there's too much going on. Boom. All right, here we go. On our 4 hours, again, right? So 1, 2, 3, 4, 5 tests off that 21 exponential moving average on the 4-hour, rejected. Taking a look at the daily charts. The daily chart's got a lot of room to run, though, to the upside here before we get to this 21 exponential moving average up here at, where are we sitting on this one? 1342. So 1342 on that one. Now, the one thing, so we do have a little bit of an issue forming, though. So, I mean, depending on how this works out, but we'll see. So we got this right here. We got a flagpole, okay? And then we have a flag pattern. So we now have a bear flag that has formed. That is not great. And if we take a look at how traditional bear flags play out, let's look at the length of the flagpole. So we'll go from here to down here, and then we'll look at the highest part of the flag, which we'll say is that. Okay, so if this were to play out to the downside, you could be looking at $837 ETH. So we'll keep a very close eye on that one. Now let's take a look at Bitcoin as well. What's going on with Bitcoin? Bitcoin just still consolidating, trading sideways. Such a strange deal here. It is still below the 21 exponential moving average on the daily. So, you know, still looking bearish. It also got really high. It has now crossed below the market baseline. It's also below the 50. So those are bearish. So do we see the return to the lows? Do we finally get our weekly bullish divergence? So price would have to come down below 17,567. We're going to keep a very close eye on Bitcoin as well. So, hey, if you're enjoying the content, don't forget to subscribe. Make sure you smash that thumbs up. And here's the way you can make some money online.